Hi, this is JR Crooks for Money and Markets TV. Earlier this month, we learned that the U.S. unemployment rate dropped to 8.5%, its lowest level in nearly 3 years. In the past, big declines in the jobless rate, like we've seen over the past few months, have often corresponded to rallies in the stock market. It happened in the mid-1970s and again in the early 80s. I think we could see a similar reaction this time, especially when investors compare the U.S. economy to Europe and to the emerging markets. The S&P 500 had a total return of just 2.1% last year, well below its average performance over the last 50 years. But it was still far better than the 15.7% decline in the Eurozone and the 18.2% drop in emerging market stocks. The sovereign debt crisis is also making U.S. Treasuries look more attractive than their international counterparts. This will continue to be the case until the safe haven buying recedes and expectations for faster growth and inflation drive U.S. interest rates higher. But as Treasury prices rise, so does the dollar, and that poses a danger to the U.S. economy. A strong dollar puts U.S. exporters at a disadvantage against foreign competitors and could ultimately put pressure on the manufacturing sector and the labor market. That's why I think it makes sense to look deeper into the unemployment figures and their relationship to the economy. When we do that, it becomes clear that the recent uptick in employment trends does not rule out the possibility of a new recession. In June of 1953, the U.S. economy added 437,000 jobs. In December of 2000, we gained 292,000 jobs. And November of 2007 saw an increase of 647,000. But in each case, a recession began within 2 months after those advances. This tells me that so far, the current recovery is resting on a weak foundation. Going forward, I think we may see increased risk appetite among investors as expectations for the U.S. economic growth improve. But the question is, can that risk appetite exist in harmony with a stronger dollar? Or will it turn out to be the saving grace for the euro? Ultimately, I believe the ongoing debacle in the Eurozone will outweigh the increased risk appetite, and the euro will sink even further against the dollar. I'm JR Crooks for Money and Markets TV. Thanks for watching.